Hello financial investors and welcome to the channel. My name is Brent and today we're going to be doing our weekly recap for March 9th through the 13th, 2020. We're going to take a look at some of the posts and discussions that were posted over on Facebook, take a look at Instagram, some of the images that were captured for this week. I would like to capture some of the images and the days and the swings of the market just to kind of record them here for historical reference. That way 5 years from now, 10 years from now, we can look back and this will be nothing but a blimp. And if you bought this week, pat yourself on the back. You bought at an enormous discount from just a few weeks ago, but we don't know what the future holds for us. It could continue down, it could bounce back. We really do not know at this point. There's a lot of unknowns out there in the market. So if you did buy this week, let me know in the comment section below that you bought. Plus, if you'd like to share what you purchased, also drop the ticker symbol down there below. Let me know a little snippet of why you bought it. And let's go ahead and get into the video. I'm going to go ahead and cover the four main indexes, the stock futures, the total S&P 500 performance here for the week. Look at financials, home builders, semiconductors, oil, the dollar, silver, gold, bonds, and then finish it up by taking a look over at mortgage rates movements for the week. So there was a lot of news that covered this week. And if you have not yet subscribed to the channel, definitely hit that subscribe button below. If you enjoy this video, find it helpful, entertaining, definitely give me a thumbs up button below. And of course, drop a comment going over what you bought and if you bought all that information. So Monday, the Saudi Arabia news came out that they had initially launched a price war. They lowered their prices across the board for their oil, and they ramped up production, really hit stock futures really hard going into Monday. And on Monday, even in the after hours here, we had stock futures were halted because they hit that, I believe it's 7%. They hit these triggers, and we discussed it in our video on Monday or Wednesday. I know I kind of went over earlier in the week, kind of when the market hits these triggers of around 5-7%, they stop trading for about 15 minutes, and there's another trigger around that 13-15%, then another one around that 20-23%, and there's multiple triggers throughout the day where it kind of just halts the market. There's no buying, there's no selling, to kind of give people a sense of relief and make them think, do they really want to be selling out of this market? Because all they're doing is transferring their shares to someone else's account. That's all that's going on. When you're selling your shares, that means there is somebody else out there buying up your position. So that's important to know. And when finance gave us a notification this week that there was a unexpected window here where they're having issues due to excessive volumes and volatility, and also that the market has been trading placed on trading hold just because of the stock futures, or the markets, what are they called here? The triggers. They're basically the little triggers and such. So there's my Monday video, kind of going over my market fumbles and my initiation there of buying into one stock this week, which is Main Street Capital. Continue to fall this week. I'd like to buy more of it, but there's other value out there and some really strong dividend aristocrats that I've been wanting to buy, such as McDonald's, such as Johnson & Johnson, and a few others out there. So we're definitely going to be looking at the portfolio here on Monday. If you're interested to take a look at the performance, that would be one you'd want to check out here on Monday coming up. And Robinhood continued to crash. It's already crashed twice in the past. Another crash here on Monday, just opens, and then Robinhood is at it again. Normally, mine has not crashed in the past. I was able to log in this time on Monday when I was checking out the Robinhood app. It was down. I did get a free share. I think I posted it over on Instagram a bit ago, but if you do sign up for the links down in the description below for Robinhood, you get one free stock. For Webull, you get two free stocks, one for signing up, and another if you deposit anywhere from, I believe it's $10 to $100, and you get additional stock worth up to $1,400. And those are some of the platforms. M1 Finance doesn't have anything current besides the referral, so you and I both get $10 if you go through the referral program there. Stock market continues to fumble. There's my video. I did one buy, increasing my annual dividends by $9.23. I think that's something everyone needs to focus on right now, depending on what type of investor you are. Are you a dividend investor? Are you a growth investor? Right now, I would find it pretty hard to hold on to positions as a growth investor, knowing that there's really no price appreciation. There's no way I'm going to be making my money back unless I hold that position until it recovers. And with all these unknowns in the market, with all the volatility, with all that's going on, as far as the selling pressure and the businesses kind of losing their employees just because of what is going on right now, the short term is very difficult to know, and even the long term of these companies, we really don't know how long it'll take to recover, if they will recover. And I kind of post that in my discussion video here on Wednesday, kind of going over single stocks versus exchange traded funds. I'm still going to be buying into my single stocks in my wife's Roth IRA, but I have begun to deploy my own equity into my own Roth IRA on M1 Finance, on Merrill Edge, and those are basically just being funneled into ETFs because I don't have to think about it. I can just push money into the market and then not really think about it and just kind of focus on my wife's portfolio, which is mainly just single stock dividends. So I definitely have a couple different programs kind of going there. President Trump out in the news discussing possible bailouts for the oil companies, for financials, for different sectors of transportation. There's a lot of news going out there, kind of going and getting pumped out there here. A little discussion about the S&P 500 on the 12th, which was Thursday. It had lowered all the way down. Here's a screenshot of VU. So on Thursday, it was trading at $232.70, basically back to October 6th, 2017 levels. So you are basically able to buy the S&P 500 almost 2.5 years ago, just of gains have been wiped out of the market here. And that's what happens sometimes. But right now, I think we fell to roughly 30%. We've seen the S&P 500, the market as a whole, take off around 50 to 60%. So we may be halfway there. We may be recovering. Again, there's no way to know. We're just kind of, speculating, and speculation's kind of, it's not always the best method because you don't know. There's no way to actually do it. So you just kind of buy on the way down, which I've been doing. The easiest time to buy is in the red, and I was kind of being sarcastic there. I think it's always really tough for anybody to buy into the red. I've been buying into the red this whole past 2 years in my wife's Roth IRA, so I've kind of got used to buying into the red. But I did buy some new positions. I bought one share of Apple Hospitality because I had about $10 in the account that I could never get invested, but Apple Hospitality dropped to about $8 and some change. So I picked up another share of Apple Hospitality. This is a real estate investment trust for $8.59, and I also started a position in SPLV in that account. That is a Roth IRA. So I funneled $3,000 into a Roth IRA over on Merrill Edge. I funneled $6,000 into a Roth IRA on M1 Finance. So that a little over 6,000, like 6,500 on M1 Finance, and 3,000 over on Merrill Edge. And the 6,000 maxed out for 2019. So 2019 for my Roth IRA is completely done, and now I'm just kind of working on maxing out my Roth IRA for 2020 by buying SPLV in increments of about $1,000 or maybe $500 to $1,000 as it decreases by 5%. That's how my plan is for those accounts. In my wife's Roth IRA, that'll continue to dollar cost average on a weekly basis to kind of see how these kind of play out. SPLV is the ETF that I've been invested in. That's the one that I've been doing a lot of my research on between SPLV, VTI, and VU. And I decided to kind of go with SPLV. It pays out every single month. It's really focused on utilities and real estate investment trust, and it pays out every month, meaning that it pays out, every single month. So 12 times a year instead of VU, which pays out 4 times a year on a quarterly basis. So SPLV, depending on how long this kind of plays out, it'll pay out every month over $10 in dividends, and those dividends will be reinvested at these prices. So depending on how long this goes out, I'll just be able to continue to buy back shares. That position that I purchased at $48.20 is actually increased now due to Friday's sort of increase here. So it's easier to prevent bad habits than break them. Oh my goodness, I can't believe I spilled. It's easier to prevent bad habits than to break them. Okay, so I meant to say then to break them. So Friday quote seems fitting. Don't make a habit of selling into the red. Make it a habit of buying into the red, learning to get comfortable with buying down, averaging down your your unit cost, you're watching your yield on cost increase, and watch your dividends also increase as you're buying down your position. So that is all the information there. And I did post a couple screenshots over on my Instagram, kind of capturing some of the days where the market lost more than 7%. Thought that was pretty big. And then Thursday, we walloped 9.9% at the Dow, NASDAQ 9.43, S&P 9.51. And I thought this was a very fitting picture here. Everyone complained about the market potentially crippling and crashing in 2016 and 2017, 18, 19. But these are just, small little beatdowns as we had in the market here in 2020. We weren't prepared. And, I think it's a lot of fun. I'm not going to say it's a lot of fun, but I'm actually having a bit of a fun opportunity because I'm able to invest at levels that I wasn't able to invest in here in 2020 at the beginning, in 2019 and 2018, and I'm able to invest at levels at 2017. So that's pretty nice for me. S&P 500 this week lost 8.79%. Some very big days here on Monday. That's when the futures were halted and we started very low. We initially started trending higher, broke down. I believe the Fed came out, did that emergency cut. Immediately after that, the market, it just sort of lost it. There's a thing there. When you have confidence, because the market didn't have any confidence behind it, the Fed cut the emergency cut. That triggered a lot of warnings for investors saying, look, if the Fed doesn't believe and have confidence in this market and they're rapidly cutting this rate by 0.5%, what does that mean for the future? So that was a big sign there. A lot of investors sold out of their positions. Tuesday after hours, we rose up in stock futures, started higher, kind of finished higher on the day. Wednesday, we just kind of peeled off. I'm not sure what happened there on Wednesday, just about a slow, steady decline there throughout the day. Futures dropped heavily here going into Thursday. Ended 9.51%, just overnight, just started down low and basically just kind of stayed low. Friday really kind of unexpected. I was expecting a Friday sell-off, and that's something you can never predict or expect, but I was completely off there. Friday ended up 9.29%. So crazy. We're down year to date 16.09%. Dow Jones down 10.36%, down 18.76 on the year to date. Some of these days it lost 2,300 points on Thursday, and it gained almost 2,000 on Friday, lost 2,000 on Monday. It's just crazy swings right here. It's amazing. This is the most I've ever seen the S&P 500 or in the Dow Jones, just any index. I've never seen these indexes swing by this much, which is incredible in itself. The NASDAQ here down 8.17%, 5-day change. Year to date, this one's actually doing the best out of all the indexes, down 12.23%, which is really not too bad. The Russell 2000 here is beat down the most. So 5-day change. What did I say about small and mid-cap companies? This is not the time to be investing in small and mid-cap companies. These are going to get beat down. These are the ones that they don't have any sort of DR prep. They haven't been testing for these drills where they have employees working from home, where they have to lay off employees, where right here in Oregon, the governor came out saying, hey, all kids are no longer going to school from this date here, Friday. This is the last day. So the next 2 weeks, all kids are going to be staying home. That means all those parents that did not have daycare set up, that did not have somebody at home, now have to figure out a way to get either daycare for their kids, or they have to take leave in order to stay at home with their kids in order to take care of them. That's increased costs while the kids are home, because now you're having to provide for them yourself, which is normally what you would do on a basis anyways. But now they're staying home with you for not just dinner time. Usually now you're for breakfast and for lunch and all that. So there's a lot of stuff out there that's affecting many of these smaller mid-cap companies, and they're having to go out and shell out money to allow employees that are very needed in order to work from home. I know in my business, where I work at, so not my own business, but where I work at, we are having to kind of go into these plans so that we never plan for hundreds of employees to work from home. So now we're testing redundancies. Can we have 200 employees VPNing from home, remoting into desktop in order to work from home if they need to do that? So we're kind of going over these steps. It hasn't really affected us remotely here besides the crazy people at the stores buying up all the toilet paper. I don't know if they're going to build a fortress out of that or what, but that's what's going on there. Currently, futures are down. S&P down 1.16, Nasdaq down 1.17, Dow Jones down 0.62%, and a couple articles out there. You know, when we have these massive swings, who knows what can happen on Monday? It's really hard to know right now. There's too many unknowns. Right now, we may start low and go higher. We may start low and go lower. You know, after losing 10% and then gaining almost 10%, there's no way to know where the market's heading right now. Here's the market as a whole here on Friday. Lots of positions out there. Just amazingly positive on a day. If this was any other day and any other week in the market and you saw movement such as this, you would be wondering what the heck is going on. Amazon, 6.43% there on a day. Google, 9.24. Facebook, $170. Apple, 11.98%. I can't catch a break with Apple. I put a limit buy on Apple at 240. I think that was my buy. 240 is what I set. It didn't take place during active hours. It took place in the after hours. I set it for a day limit buy, and it didn't trigger in the after hours, so I kind of missed out on that. I wanted to buy $1,000 worth of Apple in my Roth IRA account. That didn't trigger. Now it's back up to 277. I think it's still a great price. Anything below 280 in the short term was where I had initially said that was a good initial investment. I do still own quite a bit of Apple. JP Morgan up 18.01%. Bank of America 17.8. This is just money from the Fed getting flooded, and this is what you see a day after $1.5 trillion gets injected into the market. I don't believe this will hold out. I think this is just a blip that we'll see here in the short term, and then it'll begin to fade as more weakness gets out there, as more investors get. I don't know. I really don't know, honestly. I think it's just we'll have to see what the media pushes out, because I think a lot of that is driven by the media. So that's the 1 day performance. So if we look at the 1 week, that's very red. So that hurts my eyes looking at this bright red. There's a lot of positions out here just down massive. Exxon down 20.07, Chevron down 12.48, Amazon down 6.11, Google, Amazon. So across the board, there wasn't a lot of green. There wasn't really any one safe sector to be in. I see my DLR over there, my Digital Realty Trust, my little REIT that I hold over on M1 Finance, probably my best performer on the week. Oracle up a whopping 1.18. I think I own that on that's my non-stock, my non-dividend account. But not a whole lot of positions out there in the green for the week. And it's not any one sector too. So if you look at every sector here across the board, not one is just kind of screaming at you. Like for utilities, even they got wallop. So NextEra Energy, 18.49%. Southern Company down 19.28. This could be a great time to pick up some utilities, just any sector as a whole, I think is a good buy. I've been buying SPLV, which focuses on utilities and REITs, but it also has a few other positions in the S&P 500. I'm not sure where waste management is in here. I know waste management is on my watch list. I'll have to take a look at that one. Financials this week down 9.67%. Big run up here on Friday. 10% there on Friday gained. So this could have been 20% if it wasn't for this just 1 day performance here. You can see financials up almost 20% there on Friday. So this could have been a much different number right there. Semiconductors down 10.96. The home builders down 18.53%. Actually very surprised about this. Lowe's and Home Depot in here are big portions of this. But we also have the Lennar Corp. We have a few other positions. Moving into oil. Oil down another 20.27. Just a massive down to the downside here on Monday. Actually closed near lows. If you would have bought here on Monday after hours, you would have actually been pretty positive on the week here. You can see Tuesday up 11%, down 4%. down 5%, basically almost nullified your Tuesday gain, but you're still up slightly there. And then 6% on Friday. So then you would have been slightly up about 6% on the week, depending on where you bought. If you bought after that initial scare, then you'd be pretty positive. The dollar is actually coming back over the past 5 days. You can see here we were down in the 93, I think at one point to hit 90. Okay, 94.89 on the 9th. So that was on Monday as oil got injected and we had that big old bombardment. It went to 94.89 and it's been rushing up now, very high here at 98.69. I'm actually surprised that it's actually as high as it is, the dollar index, just because of how much money and $1.5 trillion getting injected by the Fed. Silver down this week, 15.51%. I think this is actually a really good buying opportunity for silver. This is actually below that $14 mark. About 6 months ago, was it a year ago now? Yeah, May of 2019, silver was below this $14 mark. I think silver is great anywhere below $14, but it is very risky. It's always very risky, I think, silver. Silver, I don't think trades at its real value. I think it's suppressed a lot of the time. Gold here, down 9.02. So if you're trying to move into gold and silver to kind of be in materials and be out of securities as far as the companies, that could be risky depending on the ETFs and ticker symbols that you follow there. Bonds, the 10-year moving up slightly. The previous was 0.85. I know on the week it was down. I think it was around 0.5, 0.65, I believe in that area. 10 years now at 0.95, so it is coming back up. I see a lot of investors wanting this to come over 1% before they're going to begin jumping back into the market. There's a lot of investors that kind of stepped out of the market. If you stepped out on the way down, that's not what you want to do. If you want to position yourself that you're kind of selling on the way up, taking profits on the way up. Whenever you see something that you believe is a little bit overvalued or had issues breaking through some resistance, just kind of deleverage, take some risk off the table, take some profit, move it into some other positions that might be offering a better value, a better yield. You maybe can increase your dividends that way, and then when the market does kind of topple, then you can move your equity, new equity, into these positions that fell in the short term. So mortgage rates actually went up as of last week. So last week they were 3.56. Our call center was flooded. I work at a financial institution. We actually had to turn off the mortgage queue in order to get the callers coming in to get ask about loans, to ask about getting refinanced, and just kind of flow into the call center. So instead of just talking with somebody who would actually understand your mortgage rates, we had to train a whole bunch of the call center to go over what they need to supply, if they're asked certain questions, and we just kind of opened that up. And we've had a huge inflow, and I've heard from other areas of the financials that they've also had a high volume of calls with people wanting to lower and lock in these lower rates here. So in the twos, I believe 2.75, I think, is one of the lowest that I've seen for 30-year, and 2.25. Maybe I'm off. Maybe it was 3.25 for 15 and 3.75 for 30. But that seems off for itself, because I got a loan at 3.25, and mine's maybe several years now. I think 2015, 2016. So I think they're in the twos right now, depending on your style of loan. So that is going to be it for this video. Let me know in the comment section below, where do you think we're going to be next week? Do you think we are going to be higher? Do you think we're going to be lower? This week really did not go as expected. I didn't expect that whole oil fiasco on Monday, and that's basically it. So that is going to be it for this video. 24 minutes is where we are at. If you guys are brand new to the channel, I'd really appreciate if you do follow along, subscribe to the channel. I cover the stock market, dividends, real estate, personal finance. If there's any topic you would like to have discussed or broken down, drop it in the comment section below. Also, let me know, are you still buying at these prices after Friday? Are you wanting a bit of a cool down 10%? Where do you feel comfortable buying? If you have bought something, definitely let me know in the comment section what you purchased. and give this video a like if you haven't. Smash that thumbs up. Definitely do that as well. So that is going to be it for this video. Thank you all for tuning in. I will see you next time. Have a great day. Bye.